Monochrome Bitcoin ETF provides investors with a regulated pathway into the cryptocurrency market.
When you're ready to take your investments to the next level, you might want to consider Monochrome.
G'day and welcome to the Global View on this Friday. I'm Andrew Gagan. Good to have you with us here at ausbiz. So let's take a look at what happened overnight. And the US dollar and bond yields fell sharply after data showing US consumer prices unexpectedly fell in June, boosting bets of interest rate cuts. Now, while global equity markets ended mostly higher, it was a different story on Wall Street, with the Nasdaq dramatically ending its recent record run as investors rotated into small caps. The S&P 500 also reversing course following the consumer prices report, although the real estate index surged more than 2.5%. The small cap Russell 2000 jumped to its highest level since March 2022, with investors betting rate cuts would improve conditions for smaller companies. Alphabet, Amazon, Meta, Microsoft, Nvidia, they all fell heavily, and Tesla tumbled in its biggest one-day drop since January, on news reports that the company is delaying the launch of its robotaxi by about 2 months to October. Apple fell after hitting a record high the previous session, with the Bank of America Global Markets raising its price target on the company, saying it does expect strong iPhone sales driven in part by new AI features. Delta Airlines slumped after forecasting a lower than expected profit in the current quarter. Pepsi missed expectations for second quarter revenue, as a series of price hikes and increased competition slowed the sale of its snacks and drinks in the North American market. And ahead of its earnings results tomorrow, Citigroup slipped after US bank regulators fined the lender $136 million for failing to make adequate progress fixing data management issues. Well, US consumer prices unexpectedly fell 0.1% last month. Excluding the volatile food and energy components, core CPI gained 0.1 in June, and prices rose 3% for the 12 months through to June, reinforcing views that the disinflation process is on track. A separate report showed US initial jobless claims fell to a seasonally adjusted 222,000 last week, its lowest since late May. And the inflation data saw the 10-year Treasury yield fall to a 4-month low. It's down more than 7 basis points to 4.2%. And the 2-year dropping to 4.48%. And the US dollar also fell, with the Japanese yen gaining more than 2% as traders priced in the likelihood that the Fed will begin cutting interest rates in September. The sharp gain in the yen increased speculation that Japanese authorities may have intervened to shore up the currency. Meanwhile, the British pound has reached its highest level in a year against the dollar, as data showed British economic output increased 0.4% in May, which was above expectations. And the Aussie dollar is trading around 67.6 US cents. All right, so let's get across what is moving on Wall Street. Plenty, it would seem. Brad Gasworth is joining us from Unearthing Opportunities. Brad, very good to catch up with you again. Wow, what a session that was off the back of that inflation read. How did you see that market reaction?
Yeah, there was quite a bit of volatility and pretty big moves. You saw the darling stocks coming off their highs and trade lower. You saw a little bit of a rotation into that smaller cap area. But ultimately, I still think that you need to be owning all stocks. This is just one day. It's just a little bit of a rotation, and stocks can't go up every single day. There's a lot of bullish factors that will fuel the market in the months to come, and I'm still very much a believer in that.
All right, what are those key stocks you want in your portfolio at the moment?
Yeah, if I'm looking at large cap, I still very much like NVIDIA. So on any weakness, you still need to be buying NVIDIA, Amazon, Alphabet. Those are really the key, with Microsoft being the key AI stocks. You can also have exposure to Salesforce.com, Adobe, and again, the AI trend is in its infancy. You're going to continue to see money being poured in, and the companies that are spending are going to win in this next cycle. And those six that I just mentioned are certainly going to do so.
Separately, Tesla, and we've spoken about this plenty in the past. We did have that news overnight just as far as the robo-taxi rollout is concerned. What do you make of that?
Yeah, I mean, another delay. I feel like that's sort of a continued conversation. And yeah, Andrew, I think you and I have spoken on this topic, or at least the Tesla topic, numerous times. I'm not surprised. I'm also not surprised about, that sell-off. I think there's a lot of concerns on multiple levels. They have an amazing technology. They're a technology company. That being said, I'm still not buying it at these levels. I'd much rather have exposure to a NVIDIA, Microsoft, an Alphabet, an Amazon than a Tesla at these levels.
So overall, Brad, then you're clearly still bullish in the broader market, despite the fact that it is driven by that very narrow leadership, of course, in those stocks that you've just mentioned. But you're saying that AI thematic, if you like, is still very much intact.
Yeah, Andrew, absolutely. And, I also sound like a broken record here, and I've been saying this for years. This with AI and the ability to help corporate earnings for, any company that's really investing in the technology, which every company should be, there's dramatic improvements in efficiency. There's an increase in profitability. This is very much bullish for stocks. And if you get interest rate cuts, that's another bullish factor. There's a lot of headwinds or tailwinds behind the market that can continue to propel it higher from here.
Now, elsewhere, I did mention Delta Airlines. They're interesting because I see you note that there are record air travel numbers at the moment. What are you seeing in the airline space?
Yeah, I mean, the travel numbers came out incredibly strong. Yeah, I mean, I quoted that as well, where we saw some of the strongest numbers that we have ever, which is quite remarkable. The airline stocks ultimately, if you look from like a 30,000-foot view, you theoretically should be benefiting, but there's other crosshairs on these stocks. You've had some mergers and some potential mergers that broke up. On Delta, there's some issues with Olympics and some issues around what's going to happen. But ultimately, travel is positive for the consumer. It means the consumer is spending. That's positive for the broader market and positive for retail stocks as well.
Brad, of course, we're beginning US earnings season there. The big banks, we've already got a couple trickle in, of course, that I just mentioned. Overall, what are your expectations in terms of earnings? And I guess also with that focus of guidance.
Yeah, I mean, I'm still expecting pretty solid numbers, broadly speaking, across all industries. Now, there has been some highly inflated numbers on some of the tech darlings. So you've seen some crazy expectations for the right reason. I mean, these stocks have continued to outperform and beat. So maybe these stocks aren't able to guide to some of these high, lofty expectations. That being said, the printed numbers are seeing and we'll see some significant growth. If I break it down to sectors, I think you see the technology sector still perform very well throughout earnings. I think the retail sector might look even better. I think with inflation coming down and cooling off a bit, you might see a little bit better profitability in the guide. So you might see better margin guidance. This quarter might still have that hiccup, but I think you might have some better commentary. On the financials, I mean, in a declining rate, that's a little bit worse for them. But they've had and been able to do quite well. So it's not a space that I like to have a ton of exposure. I think if you're diversified, you must. But I certainly focus a lot more on the growth side. And, on the technology side, I'm expecting stellar earnings across the board.
Now, Brad, you have been bullish on precious metals, certainly more recently. Does that remain, given the prospect, of course, that those odds of a rate cut in September are now very much firming?
Yeah, Andrew, a great question. And yeah, I mean, again, another place I sound like a broken record. I think I've been bullish on gold and silver for a number of years, and I continue to be bullish on precious metals. I think they need to be a part of anybody's long-term portfolio. I think they're a tangible item that maintains value in all scenarios. But also just on shortages and the flight from the dollar and other assets into the gold and other precious metals like silver, I think will continue, and I expect it to continue. I think you're going to see more people wanting to have gold outright in their portfolio. And, you know, it still sort of seems strange that many people don't have it as a decent size. And I would say it's probably less than 10% in almost most portfolios, and it should be a little bit higher than that. So, I mean, there's many reasons in the draconian scenario of things really going wrong on the macro side, and let's say things escalate in the Middle East, et cetera, et cetera. It's the asset class you want to own. So in the draconian scenario, it will perform well. And even in this growth scenario, I still see you know, investments in that space, because I think you want to, you know, people who are invested in currency, they're shifting into having precious metal as a hedge. So I still like it. I think it still will perform well, and it has performed well, and I expect that to continue.
Just as an aside, Brad, what are your thoughts on crypto at the moment, in particular Bitcoin?
Yeah, I mean, it's been a little bit volatile here. I'm still not a chaser of crypto at these levels. I see. I mean, I love blockchain technology. I advise a handful of startups that are specialists in blockchain, and I love the technology. The technology is fantastic. It's, you know, it's being used behind the scenes in many companies that most people don't even realize because of the secure aspect of it. But using crypto, you know, at, you know, the currency side, you know, Bitcoin, I understand the bullish prospects. I think Ethereum is ultimately the long-term winner, and I've said that on your program for, you know, quite some time. But I still don't think you need to have a significant portion, maybe a little, you know, a little bit of exposure to crypto. But I'm still not chasing at these levels. I think there'll be better opportunities to be buying it.
Brad, thanks for joining us from Unearthing Opportunities. Good to talk to you.
Thanks, Andrew.
So let's turn to the local market. We are expecting a very positive open. Taking a look at SPI futures, they're up almost 0.6%. Stay with us because the open is just a couple of minutes away.